Hi, folks. Good day to you all. Hope you're having a great day, great week. This week, we want to talk about T.I.N.A. Yeah, not the girl, yeah, but T.I.N.A means there is no alternative. And T.I.N.A has become a very popular phrase in finance circles, and it's used to describe a situation where either the Federal Reserve or the central bank or a large player in the economy is the only buyer or the only offerer of marketable securities at a good risk. So you then find investors in the market that have a lot of excess liquidity that want to invest it, but have no outlets to do that, or outlet that can guarantee them a good return vis-a-vis the risk. So the Federal Reserve or the central bank, or whoever that might be, becomes the only player in town that can mop up excess liquidity. And because they're the only ones, then it becomes there is no alternative. You have to invest with them, even if the yields are low. So even if they offer you 0%, or in some cases in Europe, negative returns, you really have no option. You have to invest your funds. So you choose them. So Nigeria is an interesting situation. We've been coming off rates that have been double digits. I remember way back in 2017, Treasury bill rates were nearly approaching double digits. Right now, I'm looking at the rates on the latest auction. This was November the 11th. Let's just take, if you had to invest for 91 days with the Central Bank of Nigeria, what would you get in terms of a yield? Well, the current rate now is going to be 0.035. Yes, you had that correct. It's not up to a percentage point. It's 0.035. If you were to invest for like a year, at 364 days, you would get 0.30%. So still not up to a percentage point. Yeah. These rates have basically come down from the highs of 2017 or 2019. They've been going down steadily. And the part that really interests me in this rate is not just the rates, but look at the offer. I mean, the CBN was trying to raise just about 19 million on the 91-day paper, and they got a total request, i.e. investors were to buy up to 99 billion. So you can see why the CBN is dropping rates. The CBN brings out 5% paper, it's oversubscribed. Oh, so it brings out 4% paper and it's oversubscribed. 3% oversubscribed. 1% oversubscribed. Now the rate is at 0.34 and still it's oversubscribed. So you can't blame the federal Fed or the Central Bank of Nigeria for dropping rates. The problem is this. Inflation rate in Nigeria is still double digit. If we could be conservative, let's just say 13, 14%. So if you were to invest money risk-free, the risk-free rate for, say, a year, you're going to get 0.3. Instantly, you're losing on about 12.3, 12.7% just on an inflation-adjusted basis. And that's the problem with lower yields, because it's a disincentive to savings. No one will really save if you're going to get 0.30 on your money. So it's two things happening here. Number one, the CBN is trying to reduce the cost of them refinancing or them borrowing money from the private sector. That's one. And also, number two, the CBN is also trying to pressurize banks to go out and lend. Because clearly the inference of this low rates is this. If you had ₦1 billion in your vault, would you give it to the CBN at 0.3, or would you lend it out at, say, 5%? Well, the math say lend out at 5%. And that's where the CBN is trying to push people to. CBN is trying to say, hey, go out and lend this money, create risk assets, and then let the people invest those funds. And then you can make a return. You just can't put the money in the CBN vault and get a return. Yeah. So on that note, you can see where the CBN is going to, and you can see the point that you're making, which is valid. banks and financial institutions in the private sector are set up to connect the capital deficient areas with the capital rich areas. So you have capital or you have cash, you give it to a bank, and then the bank takes the funds and give it to an organization or a firm that needs capital. That's why they are created. They receive deposits and they make loans. So we want to ask ourselves, who is at fault here? Why is the Nigerian financial sector, the private sector, not creating opportunities to take up this T.I.N.A issue that we have? Why aren't they doing it? Why aren't they saying, okay, we're going to do infrastructure bonds to build a railway from, say, Lagos to Ibadan or Lagos to Calabar? And that will soak up a lot of billions of naira to invest in that project. And the rate will be much, much higher than 1%. I can guarantee you that, people would invest in that, not just the Nigerian banks, the diaspora. So when you come back to it, it's a systematic problem in Nigeria that people, or should we say in this case, investors that place money with the banks are risk adverse. They want to invest money for short term. They want to invest money without the risk. That's why you see 99 billion chasing just 19 billion on offer by the Central Bank of Nigeria. It's an oversubscription, more than double the offer that the CBN is making, because everyone is running to risk-free, to safety. So the question is, why is everyone going to safety? Well, because the investing environment is not conducive to invest. I explain. If you had to set up a factory to, say, make rice in Nigeria, you would have to create your own power, probably your own water, probably your own security. Then you'd have to do the logistics and take the rice from your farm to the market. You'd have to collect funds. You'd have to open a bank account. Then you have to deal with the government, the rates, the fines, the fees, and all that. If you add all that in, all the sweat capital, all that in, it scares people. It scares investors. People are afraid that if they invest money, they might not get it back. And the second thing is, because of the COVID, there's a lot of commerce that has shut down. So the commerce sector is not as buoyant as it were pre-COVID. So this has pushed investors to say, okay, we're just going to take a breather till COVID is over, and then we can continue what we're doing. And that's basically what's leading to the situation. That's one explanation. Remember what I said, the CBN is also deliberately pushing the rates down to finance their paper cheaper. But they can only do that because there is no alternative, because the private sector has refused or cannot or does not have enough paper to present to counter the very, very low rates that the CBN are offering. So we're back to square one, as it were. What would happen if CBN took their rates negative? In which case, CBN is going to tell the pension fund administrators and the banks, if you place money with the Central Bank of Nigeria, you would pay us a fee to actually hold your money and not invest it. Will then not be the spark to make the private sector then create these opportunities? Will that then cause all these funds chasing risk-free to then start to take risks, start to create jobs, start to create projects that can be financed? That's a question I don't know the answer to, but it's a good topic for a podcast, don't you say? So I think the key thing for us here is this. There are two issues going on. Number one, of course, the environment with COVID has decimated opportunities. And number two, the CBN has got a policy. Every banker would have a policy to borrow cheaper. So it's not a nefarious policy. It's actually good balance sheet management. Those two things are going to be with us for a while. I would say for at least for a quarter or two. And really, what needs to happen really is investors have got to ask themselves, can they afford negative rates? The pension fund contributors have to ask themselves, can they take negative rates or low rates at this level into their portfolio for the next year or two? Because every year that there's inflation for 13%, that means you've lost a real return for that year. And that's going to be a carryover into your portfolio and will ultimately affect the return. So to summarize, T.I.N.A, there is no alternative. Caused by too much money, chasing too few risks assets created by the sovereign, in this case, the Central Bank of Nigeria. It could be the Fed, anywhere it is. And once that happens, you then see rates start to plummet towards zero. The ideal situation should be that the private sector should counter T.I.N.A by giving opportunities to investors to put their monies at a higher risk, but at a higher return. But we don't see a lot of that. And that has got to change. Otherwise, like I said, every contribution right now in a savings account, in a pension savings account, is going to make a real negative return. And that should worry everyone. All right, guys, I'll see you next week. Thank you for listening. If you do have any questions, we're on Twitter, FinPlanCaluAjo1. Send me a DM. I'll respond. Thank you so much, guys. You have a good one.